thank you everyone for joining us. And I have the privilege of the introductions have already happened, but actually talking on some really exciting topics specifically because the founders that I have on stage actually have two completely contrasting journeys in being able to build out the conglomerates in the digital space, leading platforms in India. I would rather prefer to call it platforms because the platform space in general all across the world has become a phenomena, specifically moving away from the super apps. So I'm going to start off with Naveen and talking about the Policybazaar and the Paisabazaar journey, where you've actually built out one specific line of business and then gone on to establish another property. We'd love to be able to understand your journey and why you actually took this route, and specifically also about building adjacencies as you've gone along.
Sure. Thanks, Monica, and thank you, everybody. Like you were asking, we started Policybazaar way back in 2008, when internet was still a hobby for most of the companies, and it was a side small business. And it was started with a very deep conviction on what the problem in the industry was and what were we trying to solve. And over a period of last 15 years for Policybazaar, and a similar journey for Paisabazaar with a shorter period of 10 years, I think the approach for us for starting both was very grounds up, very organic, in terms of the problem we saw, in terms of consumer accessing, being able to access the right products with the right amount of information and the right quality of information and with independent advice. And what we realized was that as we went deeper into the problem, these categories happen to be also the ones that monetize and stand on their own legs. And that, I think, has helped us. When we were 5 years into Policybazaar, and I was not in the group then, I joined later in 2014 to set up Paisabazaar. There was a clarity that the problem in the credit side was similar, and it was not getting addressed by the players, and hence there was a space. And while it's in a similar space, but it started off like with being a very independently solvable problem, and can stand on its own legs. So our journey and our experience has been that, look at each category fairly independently, look at whether there is a good enough, strong enough problem to be solved, and then we've built it organically. We've also had a couple of inorganic experiences now, but I'll talk about that maybe later.
Absolutely, I'll actually come back to you on that. So Sumit, coming to your journey and obviously your builder experience previously as well, you actually chose to go with a completely opposite approach, which is to build out a super app, which is obviously now India's leading super app in this particular space. Talk to us about how you chose the problem statements that you were looking to solve and then build the building blocks along the way.
Sure. Thanks for having me here. I think as we looked at building a financial hub, right, the reason for us to build a financial hub for me was basically an extension to what we built at like Google Pay. The goal was digitizing payments in Google Pay. The goal here was how do we digitize all of finances for the users and help people, demystify finances for them and maximize their savings. As we tried to sort of do that, the best way to do that was by building a financial hub. Now, to build a financial hub, you can't build a small MVP and go out to that, right? For user to give their entire experience in demystifying finances for them, you can't just say, I'll just demystify only a small part of your payments for them, right? So as we try to build this financial hub, it organically built into, I wouldn't call it a super app, but very close to that, into a hub that had all four aspects of your finances, which is, I have some money, I want to deposit those in a savings account, in a fixed deposit. I want to make payments through those. I want to invest, grow my money, or I want to borrow my money, right? So it sort of covered all aspects of a user's financial journey. And our MVP ended up being a much bigger MVP than what I would recommend to most startups, but it was sort of the need for the hour for us. And it sort of held us in good way where by building this, the users got a full experience. And what we are seeing that with our retention rate being very high and the churn rate being very low, it's actually meant much stickier customers on the app who get a very experience that actually adds value in their lives.
So coming to this question, because I think a lot of builders in the room will probably have this question. When you decided on your MVP, you would probably have known that you're going to go a little slower as compared to what was expected, because fintechs are supposed to be very, very agile and move very fast. But you've always been compliant from day one, dealing with multiple regulators as well. Would love to talk about the experience and understand how did you actually face off that pressure and balance, given the build out already started with this proposition?
Makes sense. While we didn't do investments in our MVP, investments sort of came later on. Some of the other three entries were there. I think we knew from day one that we'll have to work across multiple regulations, right? We'll work across investments with SEBI. We'll work across payments and lending with RBI. We'll work with sort of INDA on the insurance side. And the idea was, how do you decide to build product which is compliant by design, right? So ensuring that we had, compliance thought through from day one and incorporated in our PRDs literally by design was something that was sort of planned for. One of the things is, I talk about, for most fintechs, trust is your biggest currency, right? Especially if you're a B2C fintech. Trust is what sort of really drives there, right? And how do you build trust? You can build, it takes months and years to build trust. You can lose trust in seconds, right? And how do you sort of do that? And by being compliant right by design from your product, thinking through what's possible, what is the spirit of the regulation. It's not sometimes the words of it, but what's the spirit of it and how are you following that from day one was important, right? So from founders and product managers to sort of a compliance team that sort of takes care of it becomes very important, right? Like, of course, as you start as a small startup, it's the responsibility of the founders to take care of that. But as you grow, then you ensure that you bring the right folks on who help drive that compliance in everything you build.
Very interesting.
Monica, just a point. You mentioned the word super app, and I was thinking about that. And my assessment is that as of today, India is still not a super app market. And if you look at within financial services, the leaders, there are leaders for each particular category. And when I think about why is that so, and I think it's what Sumit refers to. It's a combination of trust, increasing regulation, and hence the need to be an expert in that area. And the very, very high level of, because the talent is so much, yes, there's high level of competition in each vertical area. So you look at payments, there are leaders who are specializing in payments. You look at investments, stock investments, there are leaders who are specializing in that. Of course, everybody is trying to cross-sell other categories, but they're not the leaders in the other categories.
That's right.
It's working for them, yes, adding as bolt-on revenues. You look at insurance, we would like to believe that we are the leaders in the insurance comparison. You look at credit, again, yes, people are specializing, whether you're a lender, as a marketplace, we're the leader, but as a credit provider, there'll be somebody else. And so far, the country has seen that specialists with depth, yes, and they managed to build trust over a period of time, right, have become the leaders. Of course, over the next 5 to 7 years, as the ecosystem and the railroads are now much more settled and set for people to use the cross-sell or expanding into other categories, we might see emergence of a couple of super apps in reality.
Yeah, and sort of, the challenges that you have seen for super apps globally, right? I sort of put that down to 4 challenges. One, it takes time to build, right? And patience is less, especially when there is like investor money on the table. 2, super apps, especially the fintech space, deal with multiple regulators. So, as Naveen said, like being able to manage those regulations is hard, right? Third is at the end of the day, with a super app, India is a very vast and a diverse country. So a single app for everyone with a single experience doesn't work. How do you build a personalized, customized experience for every individual? right? And there's almost no super app globally that has even come close to that, right? And so that becomes sort of the challenge number 3 in that sense, right? And then the fourth one is with super apps in India, you know, as Naveen said, it's easier to sell one thing, right? From an acquisition perspective, it's like, okay, I'm going to selling stocks, I'm selling mutual funds, I'm selling loans. When you have a super app, what are you selling? If if you just say, "Oh, I'm a super app," it's very hard for an end user to do it, right? So acquisition becomes a challenge. So for anyone to do that, those are the 4 things that you really need to do right to sort of actually get it.
Actually, my own hypothesis is that looking at all the super apps across the world, that one target anchor use case is what everybody needs to build around. Payments almost for me is like a commoditized, invisible layer which everybody has to offer. But that concept of being able to replicate the China experience hasn't worked anywhere else in the world. I know there are a lot of triers, but I really like what you said specifically about users being very careful and also intelligent about what they are using the super app for. They have a target use case in mind and they almost only want to use it for that. The adjacencies built out looks really great on PowerPoint slides and for investor decks, but I don't think that the consumer on the street really understands the value prop that way. And we have examples even from my previous journey last year with Indonesia, where we saw something very similar. But I just want to double click on 2 aspects, and I'll just come to you in a bit. You've actually done this the other way around, where you've built out these adjacencies, like Sumit had that right from the very start, almost organically into branching out with a very unique problem, which is another entity or business, but in a different vertical and a category that now you're also dominating. So if for people in the room who'd like to hear about your journey and how you actually decided to do that, specifically when you had this business which is turned profitable now, how did you decide that this is the way to go and users will be able to replicate the same kind of success where you've seen with Paisabazaar?
Sure. So it was partly forced, and in hindsight, of course, turned out to be right. Partly forced in the sense that Policybazaar, being regulated by RDA, was not allowed to offer any other product other than insurance. So if we had to do anything else, it had to be a different brand. Uh, and I think partly our philosophy from the beginning was, and even more stronger now, is that if you want to win from a long-term perspective, and long-term is definitely above 10 years, 10, 15, 20 plus years, uh, you have to really go deep in the solution in terms of addressing the problem. And because again, India is a market where the competition will only intensify, it will not lighten up. And if you're not deep, you at some point you will fall behind in terms of your product, your proposition, the amount of innovation you're able to do. And if you're doing something in depth, it needs to be done almost independently. It needs to be able to stand on its own legs, needs to work in a standalone fashion. So I remember that early days of Paisabazaar, uh, for the first 7, 8 months, we had a common tech team with Policybazaar, and you can imagine, right? Only when the first 8 things of Policybazaar would get addressed is when the first thing of Paisabazaar would come into picture. And we realized, thankfully, very early that that is not the sustainable solution. And hence, if we believe and have conviction on the problem that we're solving, we need to do it almost independently, because it's a fairly, I mean, it's connected, it's financial services, but very, very different independent problem. That's the journey we've taken.
So interesting. We heard about compliance by design. We heard about trust being a currency. We heard about for solving a problem at depth. So as you can see, we're talking about builder problems. So if you have problems and you have questions that you would like to address to these founders, we will have a Q&A at the end. So please keep your questions ready. But I'd like to actually just take from what Naveen said and actually ask you this question. When you're trying to build out, and you've been, even with your previous experience, you've been actually part of journeys where you've hired, and you have also we have written templates of how mergers and acquisitions could be the way to go, but instead you still chose to build out everything and then obviously be very successful. My question to you would be, for somebody who's starting this journey right now, or was to look at your experience both on the previous one as well as this one now, what would be your advice on the build versus buy or the mergers piece, and how should you go about actually building?
See, I think it really depends upon where your company is, right, as a position, right? There are three types of hires in that sense, right? One, you are actually doing a pure accu hire. The idea is you want to grow your company, you need more engineers or more business folks or something, or more designers, some requirement that your company has, and especially sort of folks with experience in one specific area. And there, sometimes, trying to hire, let's say, 25 great iOS engineers with really top-notch quality might be difficult, but you might be lucky in getting them through a sort of a startup that's not doing well but has really great iOS talent, right? So an acqui-hire can sort of work pretty well in that sense, right? I've done that, during my Google days in that sense. Yeah, if you are looking at, looking to sort of build other capabilities, right? Like, you're trying to get some tech stack going, and you say you have lack of sort of tech knowledge, then you maybe look at companies with capabilities there, right? And the third case is where you're looking like a capability and business, right? If you look at like what YouTube's hire or YouTube's acquisition by Google way back in early 2000s was, that was basically a sort of a, there was a huge capability there, and they said they'll build the business, they'll add Google folks to help with the business side, but the capability was there from YouTube, and they know how to scale that at Google, right? So it really depends upon what position you are in, and there are multiple avenues of at least the buy side. Build comes is, again, at Five Money, we have sort of been, have the habit of build everything from scratch. So everything from our RegTech solutions to bunch of other risk fraud solutions, most of them has been built. One or two has been buy, where we said, like, okay, AWS, I'll still have to use AWS, or, if there are like well-known stacks that I'm using out there, I'll still sort of go ahead and use it. But where I felt that by building this, I'm building my IP in the company over the long term, then the answer was build. Or if by building it would slow me down in a way where I'm losing an opportunity in the market, then it will be a buy. Right? So only times you don't build, as my definition is, if this is no IP, or by building I'm actually slowing my pace down and I'm losing an opportunity in the market. Otherwise, generally the answer is build.
Interesting. Naveen, do you share the same opinion as well? Specifically because you're dealing with a particular vertical that you chose in Paisabazaar, which is highly contested, highly competitive. Engineers are very hard to get by. How did you decide that this is the vertical space you want to dominate with building in-house? Or did you try to actually
No,
acquire
similar,
companies?
similar. See, but M&A mostly does not work and rarely works. So the threshold for considering an M&A also has to be very much higher than build. And I think Sumit mentioned quite a few good points on what scenarios would you consider buying. Otherwise, build should normally be the default option. And I've seen multiple times, we've had a couple of failed experiments when we have tried to acquire. That if you're acquiring for the wrong reasons, or you're not able to align, especially if you're acquiring or getting the people, and those are very important part of the equation, and if you're not able to align them, in multiple startups we've seen, right, where it then does not work. So for us, it's build always. The only scenarios where we buy, and it's not build versus buy, it's M&A, right? You talked about, we do take services now, which are buy basis, like for example, an account aggregator kind of a service. But if organic versus inorganic, mostly will be organic. The inorganic case, I think, can only be where, in our case at least, where it's going to help the core, and it's still not core enough for us to build ourselves. But if it does well, it will help the core business. I'll share one example. We took a stake in a platform called Get Visit, which is a health platform. Provides health services and health related pieces to employees of corporates. And we thought it's not core enough for us to build it out ourselves. But if it does well, it can really help us in our core business, which is corporate insurance and health insurance, by offering something that's differentiated from the other insurance players. So that's I think one use case. Sumit talked about one more use case, which is that you really like a team and it allows you to hire a team with specific skill, and it will become a core part over the long term. But so you acquire them really early. But I think beyond that, the buy piece becomes very tricky.
Interesting. So we've actually heard about the complete proposition in terms of how both the builders have actually taken the decision to start and then to continue to execute and lead and dominate in a space, and both have had very different journeys. Now moving to the next part, which is probably the breaking news and the biggest debated hot topic item, which is compliance. And rather than talking about whether we have to be compliant or not, because both the fintechs would agree we have to be, I think I'd love to be able to talk about a different question that many people should have now in the room, which is who is really responsible for following compliance to the T? And you spoke about compliance by design in terms of product build out. But I'd love to understand, with so many regulators and the whole concept of a digital conglomerate or a super app is that you're dealing with multiple regulators and now multiple SROs, hopefully in the future. How do we go about doing this, and who is that single point of contact or the one responsible in a RASCI model, in your view, who should be managing this?
There's no good answer to this, but I'll give you my perspective on this one, right? Like, I think when you start, you're a small company, right? You're agile, you're trying to be, let's say, under 40, 50 folks. You've probably not hired somebody in your compliance team or something. The responsibility lies on the founders and the product managers. Right, so let's say you're in a 50-member company, you're dealing with SEBI and RBI. You have a product manager dealing with your RBI-related business and a product manager dealing with your SEBI-related business. So your product manager or the business head, whatever you want to say, right? Like the product or business person needs also to understand compliance in and out, right? Needs to have read the master circulars, needs to understand what it is and be able to interpret it. Otherwise, if you're making business decisions and you don't know what's going on in your circular, you're probably making wrong calls there, right? As you grow and as you scale and as you go in that, right, like if you've launched, you have had some success initially, you've had somebody on a compliance team, then the compliance person helps you drive it through and ensure you're doing the right thing, right? But I think every time when you build, it's very important for the person who is building, it could be a business lead, a product lead, to both not just understand the user, but understand, the way I look at, any kind of regulation is two things, right? It's an enabler as well as a restriction, or the guardrails that you have, right? So you actually, if you take a circular and say, okay, this is potentially the guardrails, this is what it can enable me to do, you'll end up building a much better product that both falls, under regulation in a compliant way and solve user needs.
Interesting. So I'd like to actually hear from you, Naveen, about exactly the same topic. Who do you think is responsible, and how would you deal going about it with these two different entities?
Sure. So my view is that if you are in financial services, in a product category which deals directly with consumer, you are a B2C, and if you aim to build a long-lasting business, you would either be already regulated or you will get regulated. And once you have that clarity, I think it has to be top down. The founder, the CEO, the top management has to feel responsibility towards regulation. If you're directly regulated anyways, there's no option, but even if you're not, about the compliance part. And only if you are aligned at the top level, starting from the CEO or the founder or the promoter, is where you are able to build a culture. Sometimes when you're aligned, even then you struggle to build a culture and you make mistakes, but that's almost a given. And then you build a culture in, almost top down, that everybody takes compliance with the right amount of seriousness and thinking. And especially, I think in this environment today, from a consumer protection, if you get that sorted and if you're on the right side, you will be okay. And so, yeah, the simple answer is that it has to be totally top down. And of course, as you grow, and if you're directly regulated, you get experts. So there will be a compliance head who understands, there will be a legal head who understand their subject matter. But the need and the urgency and the seriousness has to be driven top down.
So there's a very big need for, I think, founders to understand that there is literally no gray area, at least not in India and across the world, specifically when you're dealing with regulators and everybody who says who is compliance's problem. I think it's the entire culture of being able to build a compliant organization being driven top down. I really like what we've heard right now, but I would love to also talk about, because again, your users are using different products on your apps. There is data which is being obviously actively looked at, and I wouldn't say shared across entity, but of course being managed to be able to develop consumer insights. Would love to get your short take on also how this is managed, because the regulator has a very strong view on it. At the same time, you need this in order to be able to grow your consumer base and serve consumers. So how do you deal with this?
So I think, data is generally looked by machines, right? So if you're using ML or anything else, you actually don't need humans to look at data, right? So I think, again, having come from a security background myself, I spent like first 7-8 years of my life in sort of the security space. If you again have security by design and default, data privacy is generally taken care of, right? A classic example is, we are a financial hub where people use the account that's used by FI for doing salary accounts and stuff, right? Like if there was no data privacy, like employees won't be comfortable putting in the salaries in the FI account, right? And I think a classic example that we do, which I don't know with most of the industry probably doesn't, no engineer has direct database access in the company, right? A simple example like that changes the game completely, right? Everything is logged, every access is through consumer support tickets or anything, and that's not direct AV, that's through the tools that are provided to them, which are, to solve actual consumer problems. And again, there are ways to solve data if done correctly. It needs time and effort, but if done right, you can build a very compliant system there.
Your thoughts?
Yeah, just a couple of thoughts at a high level. I think there are two aspects to it: data privacy and fair or unfair data usage. On privacy, my view is that the consumers in India actually do not care too much about privacy. You look at the amount of data we give to Google, Facebook, any social media, and every time we have run an experiment where we needed to use the data for some particular insights or creating a product, and we've just gone out and transparently asked in the right font size to the consumer on are they comfortable. The answer invariably is the consumer, once they understand that why will it help them, they're very comfortable letting you use the data. Account aggregator, as it scales up, would be a great example and validation of that also. So that's on the privacy side. Consumers, I have seen across multiple interactions, are very comfortable. They just need to know that how you're using it, and they don't want to be not told or told in the font that they can't read.
Yes.
So once you get that sorted, I think then comes the fair usage. And I think what Sumit talked about in terms of the internal access and prevention of data leakage or data misuse internally, that's a given again, given, assuming you're at a certain scale, etc. That'll get regulated very easily. The fair usage part is also, I think, something that if you're very clear with the consumer, so for example, we provide credit score as a product and we are very clear to the consumer on how we will use the data. We also give them the option, even before the data protection law comes in, that consumers can actually come and delete their entire history on our platform with a click of a button, and it's available, again, not very difficult to find, etc. So once you give those options and tell them that how you're using it and use it in a fair manner, I think that part is fairly easy, and consumers are receptive to it, and so would the, I think, regulator. The purpose of the data protection bill also is to be very clear to the transparent to the consumer, and be very clear in how you're going to use it, and provide options to the consumers on when they do not want you to use it in future.
Yeah, so far as we agree that data is the consumers and consumer has control and transparency over it, I think we'll be fine.
This is the best part, that our bills are coming in, but the fintechs are already compliant, so I'm sure this gives a lot of comfort to the room. Now talking about the most other interesting part about fintechs, super apps, and of course, conglomerates. Where is the money going to come from, and are we earning enough revenue from these models that have been created? So talking about the monetization capabilities, like data is monetizable as we know it. Data provides us insights which helps you scale to millions of users. But how do you go about creating profitability for your business? And what has worked for you?
Uh, so we are now profitable, both Policybazaar and Paisabazaar. And for us, it's very, very basic first principle approach that has worked, that, for every transaction that was happening, there is a certain revenue that comes in. And, of course, initially, in the initial period, the cost to do the transaction was higher, and hence you were not profitable as a company. But as one matures, scales up, there has to be very clear line of sight on how. So, for example, on variable cost, except for the first 1-2 years, we were always margin positive. And so it was only the brand and the technology and the management piece which was making us loss making. And that starts to change at a certain scale and above. And as you get economies of scale. So I think for every business, any business that you're running, you have to be very clear that the core product which you're offering, every time there is a transaction, there is some ability to make money with consumer very clearly knowing that that's how you're making money. Because if you try to do data exercise at the back end, that's not sustainable. And once you get that sorted, I think also given the environment over the last 3-4 years where everybody suddenly realized that the investors suddenly realized that they want to see profitability, and there were accidents that happened globally in terms of people not actually being able to monetize properly and struggling when they tried to. I think that's given a lot of awareness and increasingly more discipline across the startup world. So in that sense, I think it's good, including us. And a lot of companies have either become profitable, maybe not a lot, a few companies have become profitable, and a lot of them are close to getting there with a clear thinking. And I think once that thinking and mindset changes, of course driven by the investors also, if you're a private company, driven by shareholders and analysts if you're a public company, um, then the solutioning, the entrepreneurs, that's a great thing about them, that once they're aligned, the solutioning is very powerful, and they try and find the ways to get profitable.
So I think we heard a very famous line just this week, that Indian consumers are very demanding and they don't pay. So given that kind of pressure, Sumit, how are you looking at profitability? Is it also profitability by design?
Yeah, means I think you have to figure out, what you're building and how does that make money, right? We are a financial hub, so for us, money comes in through bunch of different offerings, right? From investments to lending to, payments doesn't have much money, but you still get something in interchange of cards and so on, right? So I think the idea is, it depends on what you're building. For us, it's the small piece add up kind of thing, right? And ensuring that how do you at scale get your cost to serve down, as even Naveen talked about. And once you get your cost to serve down, then you're sort of making revenues through each of the services you're providing to the user. There might be some which are just value add and you won't make money, but the majority do. At the end of the day, that overall, with the right scale, helps you get to profitability.
Just to add, you're absolutely right that in India, there are large pockets of products where it's not easy to monetize. You look at payment at the scale and the innovation, as there is still hard to monetize. You look at non-F&O, Sumit was talking about that before the session. Non-F&O investment, it's very hard to monetize because difficult to charge consumers. You look at direct mutual funds, very difficult. Actually, there is no monetization.
This EOP now, but there's a new license by SEBI called the EOP that allows you to monetize direct mutual funds, but still pennies there.
Yeah. So I think it's at an evolving stage. The good thing is that the economy is doing well. There is a lot of capital, patient capital. So if you deploy that in the right fashion, over a period of time, these large pockets, which are difficult to monetize today, will get monetizable as consumer awareness also increases and they get more ready to pay because they're used to good services and they expect good services in future also.
They should definitely make the headlines because I think people forget and we always go by the value conscious society other than thinking about what are users willing to pay for. And we should actually address those problem statements in the room. Now, actually, we are going to be running short of time very quickly. So before I summarize our takeaways from the session, if there are any questions in the room, then we can address those questions to Sumit and Naveen. Please raise your hand. There's a question in the front.
Check. All right. Okay. I'd like to quickly give you the mic. That's okay.
Hi, my name is Chintan. I'm a founder of a RegTech startup. My question is around compliance. Do you think there is merit in sort of building out graded compliance, building graded playbooks, especially for new fintech and RegTech founders which are sort of building in this area that, if you have 2,000 users or 5,000 users, then this is the bare minimum framework you need to have at the back end to sort of comply and then sort of move ahead overall in your journey. So, because at the end of the day, when you're building your startup, you might be struggling to get your first 100 users, 500 users, 1,000 users. But it's not possible for everyone to just be compliant on everything on day one. So yeah, I just want to know your thoughts on that. Thanks.
I can take a stab at it. Like again, I think it depends upon what you're trying to comply with, right? Like it might be 100 users, but if you're 100 users, if your data is not safe or if your KYC is not correct, then even that 100 users, you should be compliant on day one, right? I think it really depends upon what part of compliance are we talking about and so on. I think in general, I'm a bigger fan of having compliance by design, and if you design it right, see, the thing that I've personally had this problem in sort of past is you build a great product and let's say a new compliant comes in, right? So you are compliant, but a new compliance comes in. Now to sort of add this compliance in the new would result in a much worse user experience, especially for B2C products where my expertise lies. And had you thought about that same thing while building, you might have built it in a very different way, right? So if you try to add compliance later on, it actually can add more overhead. B2B side might be easier, but on B2C side, it actually becomes much easier to decide. And then even when you're doing your user research as an early founder, you're trying to validate your product market fit. And if I'm trying to validate my product market fit, I have to validate it with the constraints there. Because if I validate it without the constraints, I might see this a product market fit. But then later on, sort of doing it, the PMF is gone. And then I'm like scratching my head, what's happened, right? So that's how I would put it.
Any other questions? Please raise your hands. One last question before we end.
Check. Do we have any other questions in the audience? I believe not. Maybe we could have certain concluding thoughts.
Absolutely. So to conclude, we've actually heard from both founders very specific journeys which are very different from each other. Trust, compliance by design, and including monetization and profitability from the get-go. And talking about the unique India situation, which is about scale, it is about volumes. It is not about being price-conscious Indian society which doesn't pay versus pay. I think the problem statement has moved far away from the pre-COVID days where everything was supposed to be about the number of users. And now there's a lot of sensible, logical thinking associated with being able to create profitable businesses which actually solve consumer problems. So last thoughts from both Sumit and Naveen on this whole conglomerate versus platform build out in terms of digital capabilities to serve millions and hundreds of millions of customers, potentially not just in India but across the globe. What do you think about the future of this conglomerate business? And do you think that this is going to be a model that India can take to the globe?
See, I think I'm a firm believer in that whatever you do, ensure that you're adding value add, right? Chances of you being able to monetize or be successful is if you're actually adding value in people's lives. Right? If you're solving a core problem, right? Like product guys will say you have the product market fit in place, right? And so if you're able to do that, and if diversification is a need for that, then you diversify. Then you become a conglomerate. Don't be it just for the sake of being it. Unless you're solving a problem by that, don't do it. And if you do that, then you can definitely take a lot of those parts of it and go global, right? Because the problems, at least in my experience, is if you solve India, it's much easier to go and solve globally. It's much harder, right? Like global fintech companies have, you know, struggled in India, right? Even the likes of GPay or others, which they build a completely India platform, which was different from the global platforms, right? So if you can actually nail India, you can definitely nail a lot more markets.
Uh, like I said, I think, and like Sumit also mentioned, that it's very important as we go into the future also, given the uh, attractiveness of the financial services sector and the amount of talent and competition, that you need to be at the right level of depth of solving any particular problem. And of course, the companies who solve that problem at the right depth and at the right scale uh, in a particular area would see opportunities like we are seeing, like other people would see, to be able to use their economies of scale, to use their learnings over the last few years, to at times use the capital that you are able to get because you've done so well in a particular area, to find adjacencies and related problems that you can solve. But every time you try to solve the second problem, you have to go at the same level of depth. There'll be some advantages, etc. So we would see some people doing it really well over the next few years, and hopefully it'll be us also doing that. But it'll require the companies to go into depth for each particular problem.
So on that positive note, we'll be seeing a lot more successes of Make in India and then Make for the Globe. So thank you both for joining us today, and thank you for the audience questions, as of course for your participation.
Thank you.